weekend, a short pencil is better than a long memory. So there's a lot of information that's going to be shared, and we don't want you to miss any of it. And so I want you guys to get out your pen and paper. You know, at the same time, right now, you have an opportunity to text some folks that's on your team and let them know about the call on tonight. Get them on the call on tonight. Get them on the call tonight. Like I said, we're going to be starting in just a few moments. All right, Miss Tasha Nunn, Toledo, Ohio. I am an educated, bold, and confident BYOB master trader, anointed for wealth. That's right. That's right. All right, guys. So people are jumping on, like I said, from everywhere. And so we want to get ready for this exciting call. I promise you, you're not going to regret getting on here. So you guys just sort of chime in and get locked in again, ping some folks, or not ping them, I'm sorry, text some folks and let them know that the call is about to get started so that they can get on. And again, let me know where you're zooming in from. Let me know what city you're calling in from. And again, like I said, we're gonna get started here in just a few moments. I hope that you all are having a wonderful, wonderful day. I am. And again, been looking forward to this for the evening. So again, we got a couple more minutes, guys. Put in the chat where you're zooming in from. Also, go ahead and put in there your affirmation so that we can read that out, and so we can also know what city you're calling in from as well. Okay. Well, let's get ready. Again, get your pen and paper. It's going to be some great, exciting news and information that you're not going to want to miss. You're going to want to go back and maybe look at it again, read over the information that Miss Anderson is going to share with us on tonight. And like I said, I promise you all, it's going to be some good stuff. So, all right, where you calling in from? All right, Toledo, Ohio, Cleveland, Ohio. All right, now, Manchester, UK. All right, now, UK. All right, all right, all right. We got somebody else from the UK. Wow. All right. So again, we're going to get started here in just a few moments, guys. And again, you got time, you can go ahead and text somebody. But again, I want you to grab your pen and paper. I want you to write down your notes. I want you to write down what's being shared on tonight so that you don't miss it. All right, Fitzgerald, Georgia's in the house. All righty. All righty, all righty, all righty. Like I said, we're going to get started in just a few moments. And again, we got an exciting call on tonight, guys. Well, I tell you what, it is 9 o'clock and we start on time here. And so I'm going to go ahead and get started. But first, I want to introduce tonight our speaker, our pit master, Miss Tanya Anderson on tonight. And I promise you guys are not going to regret this call whatsoever. So let me tell you a little bit about Miss Anderson. One of the things that we always talk about when we talk about Miss Anderson, this is a lady that has been featured in the Success from Home magazine, not one time, not two times, not 5 times, not 7 times, but 10 times, guys. She's been featured in the Success from Home magazine, which is a big, big wow. She's had a business where she's been able to generate over $75 million in sales, becoming one of the top 1% money earners in the world. And if you want to know what that ranges to, that's anywhere between $200,000 to $300,000 per year and more. She's a business success coach, and she's also been featured in the Cleveland magazine this year in 2021. She is our pit master. She's billionaire bound. She loves having fun. She loves people. She loves this movement of BYOB. She loves training and teaching. And again, with all of the credentials that she has, I don't even have enough time to mention everything that this lady brings to the table. But I can tell you what, she is simply amazing. So ladies and gentlemen, I want you to stand to your online feet, and I want you to welcome my sister, my colleague, my friend, Miss Tasha Anderson, BYOB pit master. Miss Anderson, are you there?
I am here. I'm here. Thank you so much, Pastor Washington, the BYOB average breaker coach. We are so blessed and fortunate to have you. You know, me and Miss Dyer, we TNT, so you can call me Tasha, you can call me Tanya. It's both, you know, a privilege to be called either one, because we are walking in our BYOB leadership boots here. And we know that you are someone that we need to talk about and edify, because because you are the author of Let Average Go, Average Breaker Cool Kids, Breaking the Spirit of the Average. I mean, your church is called the Average Breaker Church. And so we know for a fact, because of your vision, your commitment, we know because of your energy, your spirit, you are a catalyst within any organization that you are part of is going to move forward and explode. So we couldn't be more blessed and fortunate and happy and excited to have you as part of the movement. So you all give it back to him on stand to your online feet for my friend, my colleague that I love dearly, Pastor Joseph Washington. Well, you guys, it is Tuesday nights. Back to the basics. Here we go. If you are new to this BYOB basics call, I want you to drop a 111 in the chat. If you have been cashing out and you are mastering your skill set, drop a 222. 111s if this is your first call. If you're new to the BYOB family, 222 if you are honing your skill and cashing out daily, practicing. And as we pursue perfection, we are going to get into the information tonight. So it is indeed a privilege to be on this call, to be a part of the leadership team, the educational team here with Be Your Own Bank, because we are doing something that history books will write about. And so let's talk about this weekend. It's over, but guess what? It's coming again. The third Saturday of every month. We know that this weekend was set on fire in Jacksonville. It was set on fire in Milwaukee. We have new partners from all walks of life. Look at the caliber of people that we have as part of our organization. We are part of our family. Look at all of the leaders, the spirits, the professionalism. We have hundreds of years of experience on these flyers. I mean, people from the visionary, the trade whisperer, we've got all sorts of folks, our educators, we have pastors. It's just phenomenal to be in such great company. So I want you all, wherever you're calling in from tonight, I want you all to see yourself on a flyer, because we are coming to a city near you. We want this whole screen to be filled with small rectangles representing all of the major cities across the globe. So we are definitely coming to a city near you. So let's talk about the BYOB Dream Team. Let's talk about our masterminds that we have the privilege of learning from every single week. We have the visionary, Mr. Gerald D. Rogers. Because of him, we are here. Without his vision, none of us would be learning this skill. So we have to make sure that we give thanks and gratitude every day for being enrolled in the vision. And so back in January of 2018, he shared this vision with Ms. Tasha Dyer. And ladies and gentlemen, his background is stellar. I mean, he has 25 years plus of investment banking, real estate development, mortgage lending, both on the residential and commercial side. He's a business success coach and mentor and author. You know, he shares his ministry wherever he goes, because he wants to see the world blessed by this movement. And so we couldn't be in better presence than with someone of the likes of Mr. Gerald D. Rogers. I mean, he's written compensation plans for companies across the globe. I mean, he's just a heavy hitter, and we're blessed to have him. And then we have, of course, Miss Tasha M. Dyer, the trade whisperer, the creator of the BYOB cash out strategy. I mean, ladies and gentlemen, just think about it. She could have easily honed this skill and then lived happily ever after. She doesn't have to get up at 4 o'clock in the morning Central, 5 Eastern, and then again at 9 Eastern, 8 Central to share with us what she's going to trade for the day, what she's looking at, what she's sharing her thoughts, her trade secrets with the world so that we can make an impact. A retired major from the U.S. Army who traded for the military. Is that powerful? Talk about behind the scenes. Licensed financial advisor, real estate professional, MBA recipient. I could go on and on and on. Author as well, marketing specialist. She is just a true servant leader, and we witness that every single day of the week. And then we have none other than the finance doctor, Dr. Craig Bythewood, who has his PhD in finance and economics. He's a consultant to CEOs, to CFOs. He's been a CFO himself. He's an educator. He's a business success coach. He wrote his dissertation on bank mergers and acquisitions. So these individuals are heavy hitters. He's also an author. I'm claiming it. Best-selling book. Be Your Own Bank, Hidden in Plain Sight, that was co-authored by the three of these individuals. So we are in great hands. Dr. Bythewood will answer any financial question that you can think of. And he takes a topic like economics and finance and makes it fun and understandable and memorable. So I love our dream team. I love what they stand for. I love the contribution that they've made to the movement. And I know that this is just the beginning. So it's good to know how everything began. And then we know that great leadership duplicates. So anytime you think of leadership, it's to find your replacement. And so you want to be able to attract those individuals who share your mind, like minds, like goals, like futures. And that is exactly what this flyer represents. The heartbeat of BYOB, our second generation of educators. We have Mr. Sims, our industry precisionist, strong background, regional vice president in the restaurant industry, responsible for hundreds of millions of dollars of sales and leadership development. And of course, we have our BYOB average breaker, Pastor Joseph Washington, personal development guru. He avails himself to us as well. Then we have Tanya Perry, our crypto igniter, crypto educator, 31 years in insurance. She's a missionary, huge heart, knows how to equip and empower people. Then we have Miss Bonita Brantley, our trading diva, HFX sniper. She has her master's degree as well. She's a project manager. She's an inventor. She teaches us how to get in and out of the market in minutes and compound our money. And then yours truly, I am your pit master. BYOB Basics is my specialty. My motto is let's KISS. KISS standing for keeping is super simple. If we can simplify something that's been made difficult on purpose, we can change the world. And that's what we're doing right here tonight on this Zoom platform. So BYOB is the largest economic empowerment movement in the history of mankind. So just think about it, you all. Think about the civil rights movement. Think about the women's rights movement. Without those movements, we wouldn't have an opportunity to participate in a movement such as this. We wouldn't be allowed to be our own bank, but guess what? We are. So now we're taking the baton. We're running forward. We're creating economic empowerment, and history books will write about be your own bank. So plant your flags. Make sure you are screaming from the mountaintops. Be your own bank, the largest economic empowerment movement in the history of mankind. And our vision is very clear, crystal clear. 2 million families financially educated, empowered, and impacted by March 28th, 2022. How will we do it? Well, we want you all to participate. What do we want you to do? We want you to drop a video every single day. We want you to give a brief testimony. If Miss Dyer can get up twice a day in the morning, taking time away from her family, surely we can all take 30 seconds to talk about BYOB, to talk about the strategy, to talk about the vision. See, social media shouldn't be used to waste time and for shenanigans. What we need to do is to monetize social media. We need to make it our marketing tool. So the power is in everybody embracing the culture of dropping their commercial daily. It takes 30 seconds, you all, to just say, you know what? I got up this morning at 5 a.m. I was mentored by the best of the best, the trade whisperer. I was able to cash out, compound my money by 5% a day. I'm on my way to 6 figures in 6 months. Come and join me, period. You don't need to create a dissertation. You don't need to go for 2, 3, 4, 5 minutes. Just a simple 30-second commercial, 30 seconds to 1 minute. And just think about it. We have 57 people on the line, right? So there used to be 6 degrees of separation, but now with social media, there's just 1 degree. We're 1 degree from everybody on the planet. So let's make sure we do our part, we step up and we contribute so that our testimony will be in March. Wow, we banded together on October 19th. The world shifted. We all participated in the vision that the visionary put forth and availed to all of us. So let's show our gratitude by doing our small part to push the vision forward. Let me get a 111 in the chat if those of you who are on the line can relate to contributing, being a person who pushes the power. You know, it doesn't take a lot of time. It just takes your commitment. Either you're contributing or you're always looking to see what someone else can do for you. So let's make sure that we not only talk about the vision, we are the vision. We are Be Your Own Bank. If Mark Zuckerberg could attract 2 billion plus people to Facebook to waste time, surely we can take the time out to drop something daily that will move the masses forward. I read a statistic today that there are 36 million people here in the United States living in poverty. And we have a solution. So we need to make sure we're talking about it and being about it. How does it start? With positive minds, positive vibes, to live a positive life. We want to start our day with affirmations. I am a BYOB master trader. I am the signal. All my trades end in profit. I'm an educated trader. Therefore, I am a profitable trader. I am 777. I'm anointed for wealth. I am a billionaire. I am a billionaire. You have to say it first. You have to make sure that your subconscious mind is being fed the food that you need in order to push yourself to your dreams and goals. So here we are. We want to make sure that we are educated traders so that we know why we're doing what we're doing. So the first thing we want to do is understand the basic terms that we utilize in order to take profit in the market. So we have indicators. We have access to indicators, which are tools that are used to predict future prices. So I want you all to write that down if you're taking notes. An indicator is a tool that is used to predict future prices. All right. And so this is powerful. This is what's been hidden in plain sight. Having access to tools such as this that are housed in the academy. That's why you want to enroll and remain enrolled and let the academy pay for your education. The stochastic, that is your leading indicator. Your leading indicator means that this is what you zero in on first when you open up the charts and you're evaluating the charts. That the stochastic measures the momentum of price and it gives clues about trend shifts. Remember, the trend is your friend. Price moves up, price moves down, and it moves sideways. So you want to pay attention to the direction of the stochastic so that you can understand what direction you're looking for price to go into when you're analyzing. It's used to indicate when an asset is moving into an overbought or an oversold position. These are 2 key terms that you definitely want to understand and master. So if you're taking notes, write down overbought and oversold. And when I pull up the vibrato, we're going to talk about what those terms mean. And then we have the Hikinashi candles, our lagging indicators. That means that we look at the stochastic first. Next, we look at our HA candles. These are simply trend candles. They're different from Japanese candles, but they're trend candles that help identify whether the market is pushing an asset's value up, down, or sideways. All right. Then we have the parabolic stop and reverse. This is another lagging indicator. So this is the third step in the process. Once you evaluate the stochastic, once you identify the Hikinashi candles, then you want to look for that PSAR to flip. And remember, it looks like a small dot. It's a very small cross that outlines candles. It is used to determine your stop loss, your entry, and or your exit points for a trade. It is considered your dynamic support and resistance line. Why do we call it dynamic? Because it's not static. It moves. It doesn't stay still like when you draw a support and resistance line. So here are the 3 simple steps. We definitely want you to embrace the recipe for success. When you are following a recipe and it's been handed down for generations, you know that you're going to have a winning product, a winning dish, a winning meal if you follow that recipe. I talk about it all the time. Thanksgiving is coming, right? And we know who to ask to bring what. You know, certain people are known, their expertise in this or that, you know, and we know who not to ask to make the potato salad because we don't want nobody messing up the potato salad, right? Give me a 777 in the chat. If you got that one person, you know, if they make it, you're not going to eat it because they didn't follow the recipe. 777 in the chat. You guys know what I'm talking about. There's some people that you just want to stay out of the kitchen, right? So we are going to follow this 3-step process, and we're going to, number 1, review the stochastic. The stochastic, when you're looking for a sale, you want to look for the blue and the red line to be around the 80, crossing over, heading downward, right? We want it to be heading downward. This is indicating that price is moving down from the 80 marker because anything that goes up must come down. Then you have the candles. Candles will be flat on top. The red candle with the flat top, it indicates a strong sale. Now, when there's a wick that forms on the top of the candle, it indicates a trend reversal. So pay attention to when those the wicks form, because that will indicate that there's a trend reversal. And then the PSAR, the dot above the candles, it adds extra confirmation. So the PSAR, just remember, when it's above the red candle, it's pushing the candle down. So again, when you're looking for a sale, what does sale mean? It means that price is dropping, it's decreasing. You're not selling, you're watching the price decrease because those who are moving the market, they're selling. So let's talk about a buy. We're not buying, right? Because in this arena, we are trading. We're analyzing what's happening in the market. So we don't have to purchase any assets. That's why the entry to this arena, it is so easy because you could take $50, put it in your broker account, execute a trade a day, and build yourself a wealthy account, a big bank account. So buy means that we're looking for price to increase. The stochastic is around the 20 and it's heading upward. The blue line crosses over the red line, heading upward towards the 80 marker. And that means that when you're looking for a buy, price is oversold. So it's going to turn around and buy. And then the candle is green with a flat bottom. So when the bottom is flat, that indicates a strong buy. But when a wick forms on the bottom of the candle, it indicates that a trend reversal is coming. And then the PSAR needs to be below the green candle with the flat bottom. This adds extra confirmation. When that PSAR flips, it's pushing the price up. So just remember, when you see a green candle, the PSAR needs to be underneath the green candle, pushing price up. When the PSAR is above the red candle, it's pushing price down, and that's added momentum. So we are going to go into the vibrata so that you can see the tool where the visionary himself has been the spokesperson for this tool. We're excited because we have an opportunity to work directly with him. He is just a phone call away. And the person who designed this tool, sought after him because Mr. Rogers, the visionary, has so much experience in this space that they wanted him to be the spokesperson. So you should you should feel honored to be a part of a platform where the person who dropped this tool that big banks use sought opinion. He wanted him to vet this tool to make sure it was something that we would see tremendous value in. So those are the type of people that we have an opportunity to work with and to be mentored by. So this is the vibrata. And I'm going to share with you all what we are looking at. So on the left-hand side, you see triggers. Now, how did I get to this particular vibrata? the older version, the web analyzer, I went to imlwebanalyzer.com and I logged in with my iMarkets username and password. When you open up the chart, you want to click at the bottom on strategy, select the BYOB cash out, and boom, you will see our indicators. Okay. Now on the left-hand side, you see triggers. So here we have, we're going to focus on Forex pairs because this is a basics call. But keep in mind that this strategy can be used on any and every asset that has a chart associated to it. It's not just Forex. It's a strategy. It's a something that can be used with any asset. So again, these are triggers. So this is telling you that NZDJPY just triggered 6 minutes ago. And this is giving you a nudge saying, look, this is what's moving right now in the market. So you should pay attention to it. So if I were to click on NZDJPY there, and then M15 means that the trigger is happening on the 15-minute chart, and triggers are called in a correction. So I'm going to show you what that looks like. When you have a trend, you see here, you have these green candles moving up. You have the stochastic moving up, which is what we should look at first, right? And then you see here that you have now red candles here, that this is the trend and this is the correction. So these triggers are called in a correction. The trend was going up, which represents a buy, but now it's correcting, right? So what happens is when price comes out of a correction, then typically you can identify a good trade setup. So the value of having these tools is that you don't have to wonder or guess what you should pay attention to when you're new to the market. All you have to do is click, 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 and evaluate. So here we have a EUR JPY trigger. We have a USD JPY trigger. You have a GBP AUD trigger. And what this simply helps you to do is to establish a relationship with the market, because you'll understand what moves at what time of day. You'll be able to check and see, you know, what the historical data looks like. So you definitely have tremendous value by being connected to the Vibrata, which is housed in the Academy. There are no other tools like this. And then across the top, you will see the charts. So with the basic strategy, the charts that we want to focus on are the 5-minute chart, the 15-minute chart, and the 1 hour. The 5-minute chart, the 15-minute chart, and the 1 hour chart. Now, what's the difference between the charts? It simply means that on the 5-minute chart, you see a new candle appear on this far right side, closest to price, every 5 minutes. On the 15-minute chart, you see a candle appear every 15 minutes. And on the 1 hour chart, you see a candle appear every 1 hour. Now, the price is the same on each chart. It's just giving you a different perspective. And so the 1 hour chart, that shows you the direction of the market. The 15-minute chart, this is where we analyze to determine when we see the perfect setup. And the 5-minute chart shows you the movement within price. And so those are the different reasons why we analyze on 3 different charts before we execute a trade. All right, any questions so far about the triggers? Danielle, you make the potato salad. I love it. Any questions right now about the triggers or the charts? Questions, questions, questions? Because we want everybody to be clear and understand why you have to use these tools in order to get your trades to end in profit. It's a necessity. In the example, NZDJPY. Okay. Can you elaborate further? You're saying it's in a correction. Yes. So you see here, we are on, this is NZDJPY. These are the prices here. The price was trending up, and then it reached a position where it didn't break through this area. So it started to correct here, and that's why we have this trigger here. So everything that you see on the left here, these triggers are called in a correction. It's going against the trend, yet Stochastic says to sell. So you see how it was trending up, right? And so that's the reason why you see the buy, the color green here, because the trend was setting up and then it began to correct. So you still have to analyze using the BYOB strategy. It's just telling you, listen, this is the time to take a look at this particular currency pair, because when we see something that's overbought, right, we can then look at it. The stochastic is correcting. You want to make sure that you go to join our class on Thursday for the advanced conversation, but you still, the bottom line is you still have to analyze using the strategy. So here you'll notice that is overbought and the stochastic is curving down, heading into a sell, right? But what you want to realize is that this isn't telling you, it's not telling you I'm a signal, it's just a trigger. So the difference between signals and triggers are people use signals to let them know when to enter a trade. Triggers are used so that you can understand what to look at to analyze the trade using our strategy. So that's the difference. All right. So you still have to analyze. This isn't telling you to jump into a buy. It's just showing you it was trending up. Now it's correcting. All right. And so with that being said, we were talking about the charts. This is price here on the right. Right. And I like to have the price because you know what? I'm 52 and my eyes are not like they used to be. So right here, if you click on strategy where it says high chart details, I like to turn it on. You know why? Because when I turn that on, and I can see the price here, the current price in big, bold numbers. And when I see those numbers begin to move, then I look for the perfect entry. So right here, you will have the price, the current price, because when price is moving, you want to move. If price is not moving, you don't want to enter the trade. You want to enter your trades when there's momentum in the market. So then here at the bottom, so this is price along the side. And here you'll see at the bottom, the stochastic. The stochastic is housed in the bottom area of our chart, and it flows throughout this purple shaded area. So the purple shaded area, it starts at 0 and it goes to 100. However, we focus on the 20 marker and the 80 marker. And the reason we focus on the 20 and the 80 marker is because when price is oversold, like price dropped from the 80 to the 20, when it reaches around the 20 or below the 20, we call that oversold, meaning that historically price hasn't gotten much lower than this over time. So when price reaches this low, we expect it to turn around and increase again. So this shows you here when the blue line is crossing over the red around the 80 heading downward, that price was overbought. And now you want to analyze a sale. And just the reverse, when price is oversold, you want to then look for the blue line to cross over the red and begin to head up because price is going to begin to increase. So just remember, what goes up must come down. What goes up must come down. All right, and then at the bottom of the chart, you see the date and the time. So when you put your cursor here on the chart, the date will appear along with the time. So you want to make sure that when you're analyzing, you're paying attention to the date and time. You're welcome. So you can go back and then figure out, okay, this is what moved. This is, if you enter a trade and you're not sure why you took profit, you can go back and then look at the time and the date and analyze it. That's how you establish a relationship with the market. So you always want to be journaling as you are trading, especially just all the time, because you want to establish that strong relationship with the market. So the stochastic, again, overbought is when the stochastic is around the 80. You're waiting for it to turn around and go down to enter a sale. When price is oversold, the blue line and the red line are around or below the 20, and it's going to turn around and begin to head upward, which means that price is going to increase. Look, see this, see how the trigger for NZD JPY was caught in a correction, and now it's starting to buy again. See that? So, you know, that's just that, you know, I got distracted because I saw that happen. So when you're evaluating a trade and you want to know, okay, when am I going to enter this trade? You have to start on the 15-minute chart to start your analysis. And then once you identify the blue line crossing over the red, like we see here, heading in an upward momentum, the next thing you want to do is look for a green candle with a flat bottom. So let me make this bigger so you all can see what I'm talking about. We can have a great example right here towards the end of the chart. All right, so the blue line crossed over the red right here and started heading up. So the blue line crossing over the red is what you look for first when you look for prices. What is it? It's oversold when it's around the 20, and you're looking for price to reverse and begin to increase. So you look for the blue line to cross over the red. Good, light bulb starting to come on. Awesome, awesome, awesome. So you look for the blue line crossing over the red, heading in an upward momentum, right? And then you have to patiently wait for the green candle with the flat bottom and a peace hour, all right? And so once you identify the green candle, flat bottom, and a peace hour, then what you want to do is analyze, look for time frame confluence on the 1 hour chart and the 5-minute chart. So once again, price dropped, it was overbought, boom, it began to drop. Here, you know, you had a crossover, but then it began to drop again. So here we have the blue line crossing over the red, heading upward. Now we see a green candle with the flat bottom and a peace hour. So this is where we start to analyze, because we see the 3 steps lining up right here. But guess what? We need time frame confluence. So I'm going to grab an arrow and drop it beneath this candle. I'm going to go to my 1 hour chart. Now, what am I looking at on my 1 hour chart? I am looking for the stochastic to be heading in the same direction, pointing up, and I'm looking for a green candle. So let's go to the 1 hour and see what we see. All right, boom. So if I was looking at this real time, this is actually what I would see. So look at the stochastic. It's not pointing up, right? And I still have a red candle. So I wouldn't even consider, I wouldn't think about entering the trade. It's not nearly ready, right? So what you want to do is exercise patience. I want you all to drop a PPP in the chat, because patience will lead to profit. You want a perfect entry. You don't want to guess. You don't want to go on a feeling or an emotion. You want the perfect entry, because perfect practice makes perfect profits. Perfect practice makes perfect profits. Our testimony is going to be 100% accuracy across the board. Why? Because we're educated traders. We are not emotional traders. We're going to follow the rules to the letter so that we can have testimony after testimony in 2022. We're going to have quitting parties. Just quit. Why? Because I earned 6 figures in 6 months, and that's more than I was making all year here at this JOB. I am now empowered, right? I'm excited about it. So what we would have done is we would have waited for the perfect entry. So let me move this arrow over. See here, now I'm going to move this back over. So if you would have waited, you see the blue line crossing over the red right here, and the red, it has a curve to it and a green candle, right? So what you could have done is said, oh my goodness, this is this is turning up. You got this green candle. Now go back to the 15 minutes, see what it's looking like, right? So the stochastic is still pointing up, heading upward. Now you have a green candle with the flat bottom still. No wick coming out of it, right? And you have a P-star. So that's good. Let's go to the 5 minute. Let's see what we see on the 5 minute. Now here we are on the 5 minute. Let's talk about the 5 minute, because the 5 minute shows you the buy that is still in a buy because there's a green candle and the stochastic is moving sideways. So what that means is it's still buying. When you're on the 5 minute, as long as the stochastic is not pointing up and you have the same color candle and you have this strong candle here on the 1 hour and the stochastic is pointing up and everything is lined up perfectly like you see here on the 15-minute chart, then execute the trade. Go for your 10 pips and cash out. Any questions about the strategy as you are looking for a buy? Questions, comments, testimonies. Questions. Thank you. You're welcome. You're welcome. I see you cashing out. I love it. Questions, comments, testimonies. All right, remember, repetition is the mother of skill. So let's identify a great sale example with NZDJPY. Let's look at a sale. Great detail. You're welcome. All right, so it's just the opposite when price is dropping. That's the beauty of the strategy. It doesn't matter what direction price is moving in, we can compound our accounts as long as we know what we're looking for. All right, so we have the blue line crossing over the red, heading in a downward momentum. Now price, I don't want to go too far back. I don't see where it was at the 80 heading up, but it was, it was going up and down. But here we have the blue line crossing over the red above the 80, which means even more momentum, right? The higher you are, the what's the saying? The taller you are, the harder you fall, right? So that's the same here, more momentum when the price is above the 80 heading downward. So you got the blue line crossing over the red here. Once the stochastic begins to point down, then that's what you want to look for. That's your first signal. Okay, I better start evaluating this. All right, now I want to look for the red candle with a flat top. We got a red candle with a flat top here, but notice there is no P-star above this candle. So now what you have to do is wait patiently. There's no guessing, oh, it looks like it's gonna be. No, you wait for the perfect entry. Perfect practice equals perfect profits. So now you have a red candle with a flat top. You have the P-star above the candle and the stochastic is still pointing down strong. So here we are. This is the start of our analysis. So I'm going to drop a blue arrow above the P-star right here so we can go to the 1 hour and see what's happening. Because ladies and gentlemen, if the 1 hour isn't ready, there's no need to look at the 5 minute chart. And so that's just a way that we're going to conserve our time. We want to invest our time, not waste it. So if the 1 hour is not ready, there's no need of even looking at the 5 minute chart. So here we are on the 1 hour chart. Let's look at it as though it was happening real time. Let's look at what we see. So the stochastic is heading sideways. Now, even though we can use this rule on the 5 minute, we definitely cannot use this rule on the 1 hour. Definitely not. The 1 hour is the head of the household in this basic strategy. So you want to make sure that the stochastic is definitely pointing up when you're looking for a buy and definitely pointing down when you're looking for a sell entry. When in red, do I buy or sell? So if you are looking for a sell, then your indicators are the stochastics pointing down and you're looking for red candles. So you would go to your MetaTrader 4 and hit sell. If it's buying, then your stochastic is pointing up and you're looking for green candles. So that's the color scheme. And you definitely want to go back into the academy, watch your videos, because we want to make sure you understand what to look for when you're in the market. That's the value of having access to our academy, because there's no limit to the number of times that we can review it. And I like to say, when you're able to teach every video verbatim, then you need to still go back and review them again, because guess what? They're always updating them. So we always want to be in that academy. All right. So here we are. We were looking for a sale, right? We have nothing telling us on the 1 hour that is okay to enter a sale. Why? Because the stochastic is moving sideways and we have a green candle. So no way, no how, no sir. Go make yourself a sandwich, go and read a book, pray, meditate, but definitely don't enter this trade. So what would we wait for before we would enter the trade? We wait for the curve down, right? We want the blue line crossing over the red and now pointing in a downward momentum. See, starting to point down here. We've got this nice red candle. And guess what? We even have a peace hour. Now, when you have a flat top and a peace hour on the 1 hour chart, that's like, that is telling you that's a strong entry. Okay. So now let's move our arrow over here, because this is what we would have been waiting for to see. And let's just take a look, take a peek at our 15-minute chart to see what it looks like now that we have that beautiful picture on the 1 hour chart. So here I'm going to put my cursor right in the middle of the blue arrow, and I'm going to look all the way down to the stochastic. Now, guess what? It's still pointing downward. See that? The blue and the red line pointing downward. We got a nice red candle here, flat top, peace hour above it. Let's look at the 5-minute. What do we have over here? See, you notice anytime you have a lot of momentum, it's already happened on the 5-minute. And so a lot of times the stochastic on the 5-minute is going to be going sideways when you have momentum on the 15-minute and the 1 hour. A lot of times you will see that. But as long as you have the same color candle, and as long as the stochastic is not pointing in the opposite direction, then you're good. Any questions about that? Because I want people to understand the difference between what you're looking for on the 5-minute chart versus the 1 hour chart. Drop your questions now, because now is the time. This is your personal tutoring session. This is can you imagine if we had to take time out for 70 people a day to answer questions privately? It would be impossible. So come on, you all. If you have questions, drop them in the chat. Drop them. If you're clear, drop a 777 in the chat. If this is clear to you, you understand the difference between what you look for on the 5-minute chart versus the 1 hour chart, drop a 777 in the chat. Excellent. Awesome. Clarity, we love it. That's why we're here. This repetition provides clarity and perfection. So that's why we are here. I love it. All right, let's look at something else. We have a new trigger here, EURAUD. Let's see. It's called in a correction on the 5-minute chart. So you see how the chart is in alignment with the trigger, right? So we have EURAUD, and you have it called in a sell, right? You see how it was selling, and now it's correcting, right? So that is when the trigger arises. That's when the trigger is called. How are you determining stop loss and take profit? There you go. Great question. Let's go through this really quickly. Absolutely. So if I were entering a trade here, let's just say I looked at this blue line cross over the red heading downward, right? And I see a red candle, flat top. Let me go to my 15-minute. I'm sorry. We want to always practice just like we would play. So I'm going to go here. All right. Let's go here. Okay, so on the 15-minute chart, that's where we do our analysis, right? So we see here the blue line crossing over the red heading down. However, this is consolidation, right? So we wouldn't enter a trade when price is moving sideways. We don't want to enter the trade. So guess what? Even though the stochastic is around the 80, starting to head down, right? We still want to wait for a red candle with a flat top with no wick coming out of the top. All right. This has an itty bitty wick. I can see it even though, because I got on my bifocals. I have on my glasses, so I see this little bitty wick telling me no. So the stochastic dropped, it came back up, and guess what? Crossed over and dropped again. So here would be the entry. This would be what I would be looking for, the red candle, flat top, PSAR, right? So you would put your cursor right above the PSAR. You wouldn't touch the PSAR with your cursor. And then you would look all the way over to the right. You see 1.56270. That would be your stop loss for the sale. Now, if you were entering here, say you went to your MT4, boom, you entered the trade, and this is the price that you got locked in, 1.5558, right? If that was the locked in price, this is the pipette that keeps moving, right? Then what you want to do, if you think the price is going to drop, you would look at these two. So the 1, 2, 3rd, and 4th place to the right of the decimal, and you would subtract 10 from these two places. So I would set my take profit at 1.5549 and bring the pipette back. Now it's moving. So remember, it's locked in when you when you enter the trade on your MetaTrader 4. And my stop loss would be right above this PSAR. I would put my cursor here, and it would be 1.56262. So keep in mind, when you're entering a sale, your stop loss is always going to be higher than the PSAR, right above it. When you're entering a buy, let's just say this was lined up perfectly. Boom, I entered the buy. I'm putting my cursor below the PSAR here, not touching it. I'm looking over to the price, and my stop loss in this case would be 155,778. So that is how you determine the stop loss. Okay, there's a question on YouTube. After you analyze on the middle time frame 15, 5, and then go through time frame Confluence, which charts must always line up going the same direction? The 15-minute chart, the 5-minute chart, and the 1-hour chart. Those are the 3 charts that line up that you have to have Confluence with before you enter the trade. So you're entering the trade based upon everything you see on these 3 charts. Remember, the price is the same. You're just looking at it from a different perspective on each chart because you've got more movement on the 5-minute than the 15, and you have more movement on the 15 than the 1 hour. But if everything is lining up on the 5, 15, and 1 hour, you enter your trade. Remember, the 15-minute chart, that's where you start your analysis. The 1 hour and the 5-minute, that's your Confluence. The 1 hour is the head of the household. It's where the trend lies with this particular beginner strategy. The 5-minute is where you see the movement. Even if the 1 minute is, don't even look at the 1 minute. We don't have that. When we went over the 1, 2, 3 strategy, nowhere did we mention the 1 minute chart. So there's no need to look at the 1 minute chart on this basic strategy with Forex. You'll see Miss Dyer look at the 1 minute chart with indices because they move a whole lot faster. But when you're dealing with Forex, there is no need, no rhyme, no reason. You don't even need, that's just going to confuse you. And we don't even like those words, right? So we don't want to even think about the 1 minute chart because that ain't the recipe. Now, we're not going to have you bring the potato salad, because you done ventured off and went to the 1 minute chart, and that was not a part of the recipe, right? So Danielle, you still bringing the potato salad. All right, Questions, comments, testimonies. Questions, comments, testimonies. Questions, questions. All right, we're going to transition. Guess what we're going to do now? Anybody know what we're going to talk about next? What's my favorite topic? Ms. Anderson, will this training be posted? Yes, it will. Yes, it will. What's our favorite part of this call? It's on there now. Yes. Talk with Dr. B. Compounding. You got it. That's right, Dr. K. Compounding. Yes, 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 yes. And of course, Dr. B, you know, he's our boy. We love him. That's the ultimate favorite of all time, right? But as it relates to my segment, wrapping up with compounding, that's what we're getting excited about, because that's going to change our life. That's going to change our future generation. Once we implement this without deviating from the recipe, boom, we're going to be able to compound our way to wealth. So let me bring up the chart again. Let me bring up the PowerPoint presentation so we can look at compounding interest. That is my favorite part of this discussion, because this is your education in motion. This is the result of you following the recipe. The eighth wonder of the world is compounding, right? Eighth wonder. And guess who coined it? Who coined this as the eighth wonder? Albert Einstein. So ladies and gentlemen, this is something that has been hidden in plain sight forever. Compounding interest, the eighth wonder of the world. He who understands it earns it. He who does not pays it. So you know how I know that our educational system was designed to create the 95 percenters versus the 5 percenters? Because when I was in college, I was a freshman. We weren't allowed to have a job my freshman year, right? But guess what I got in the mail? Pre-approved credit card applications. I had an American Express and no job. What was that? That was by design. How did they know to send me that? Well, I was in college, right? A lot of the college students received the same thing. Macy's, you know, well, back then I shopped at Marshall Fields. So I had a Marshall Fields credit card, right? And so they were setting me up or conditioning me, because I wasn't educated financially, to begin to compound out. Now, luckily, I didn't have to pay tuition. So I got a full ride. So I didn't have student loans to worry about. But I was still being taught how to compound out, because I was being sent pre-approved credit card applications in the mail as a freshman in college with no job. Compounding interest, the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. I got excited, right? Because I didn't understand this. Those of us who are still paying back student loans, we were conditioned in the same way. You enroll, you get this education, you have to stay for 4 years, 5, 6, 7, 8 years, learn this information, and then you're going to pay us back for decades. Compounding interest, the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So that's a clue, ladies and gentlemen. Our educational system is designed to create the masses of people who are compounding out, and to hold back the information that we're sharing with you to compound in. I think that is something that we should be running around and doing jumping jacks about, because we are being exposed to the other side. So how are we going to get to 6 months to 6 figures? What we are going to do is to make sure that we practice perfectly. You want to have 100% accuracy in your trade account, 10 trades in a row, 100%, 20 trades in a row, 100%. You want to understand why you ended in profit, not just jumping in and out, closing your trades in blue, right? You want to understand why your trades end in profit. And that is when you are going to open your live account, start with a balance of $500, and then you're going to take 1 trade a day, 20 trades a month, set your profit at 5%, And then this compounding chart, which can be found in our website, BeYourOwnBankMovement.com, right? Go to menus and files. You'll be able to find this Excel spreadsheet. As a beginner, you're just focused on 10 pips cashing out. You have to enter your lot size. So make sure if you don't understand what I'm talking about when I talk about lot size, you go back into the academy because it's explained there. So after 20 successful trades, your $500 will turn into $1,326. Think about the return you get now with your money in the bank, right? Nowhere near this. Now, 6 months to six figures, take a screenshot, put it on your ceiling above your bed, put it on your mirror in your bathroom. It should be everywhere, on your refrigerator, your visor, in the car, right? Remind yourself, I am on my way to six figures in 6 months. Do you realize how powerful that is? We are changing the world, you all. Start with 500 month one. Start with 1,300 month two. Start with 3,500 month three. Start with 9,300 month four. Start with 24,000 month five. Start with 65,000 month six. End month six at 174 grand. And then you have 100,000 to withdraw. Boom, continue to compound your way to 8 figures in 12 months. What if you got this half right? What if you got 50,000 in 6 months? And what if you were able to get 5 million in 12 months? Would that be okay? Did you get a game plan like that in school? Drop a 777 in the chat if you are excited about 6 figures in 6 months. I get so excited. This is the grand finale of this call. This is why you want to practice perfectly. This is why you want to wake up at 5 a.m. Eastern. This is why you want to be on the call at 9 a.m. Eastern so that you can hear from the trade whisperer who created the strategy and perfect your skill. This can be applied to HFX as well. In the beginning, it's going to start small, but it's going to snowball. You're going to be riding the waves. You're going to be cashing out thousands of dollars a day. You're going to be dropping your 777 in the chat. Get your phones out so you can get plugged in and stay turned on. And we want to know these resources. We want you to be aware of the resources. BeYourOwnBankMovement.com. Make sure you go visit the site, get familiar with it, send people to the site so they can hear our testimonies. They can watch the 2-minute video. Use the YouTube channel. It is your resource. All the recordings that you see from the trainings will be on the YouTube channel. Text BYOB Cash Out to 904-567-0634. And then make sure you're part of our Telegram community, our Clubhouse community. Stay enrolled in the academy. Let the academy pay for your trade accounts. Use OPM, other people's money, so that we can build our way to wealth. Take advantage of the rewards program. You will get paid by simply enrolling within the BYOB family. You will get paid by cashing out airfare for 2 4-night resorts getaways. So make sure that you send your information to BeYourOwnBankMovement@gmail.com. And if you need the details, go to our website, BeYourOwnBankMovement.com, and watch the video that explains our rewards program, because membership definitely has its privileges. So it'll take movement. You have to move. You have to push the button to create your own utopia, as we will. Expose, and then end up with 2 million families, March 28, 2022. Drop a 111 in the chat if you are committed to dropping a 30-second video every single day. We want you to commit tonight to helping us push this movement forward. This is the largest economic empowerment movement in the history of mankind. And with that being said, it is my privilege to turn this platform over to none other than the finance doctor. This gentleman is someone I love, respect, admire. He breaks things down very simplistically so we can understand concepts that have been made complex by design so that we can remain on the 95%. But that is a lie, because he's going to educate and inspire us tonight to think differently, think like the big banks. He has his PhD in finance and economics, so he is well equipped to help us take our minds, our thoughts, our bank accounts to the next level. He loves to have a good time, knows all the facts, and it has a huge heart to help and empower and inspire. Please help me turn this Zoom platform over, none other to Dr. Craig Bythewood. Dr. B, are you there?
Yes, I am, Miss Tanya Anderson. Thank you so much for your warm introduction. We as a movement just really love everything that you are to us. We love the way in which you energetically provide a new version of the same thing every single Tuesday. I've mentioned before that I watch every single one and always pick up something new. You know, it's interesting that people will say that they don't watch things more than once, or they don't read things more than once. I was that guy. But you know how when you watch a movie and then when you see it the second time, you notice things, and you would even say something like, did it change? Did they add that? Well, what's really happening is that we're constantly growing. We're constantly expanding. And once our brain expands, once our mind expands, it never goes back to its original state. So what happens is the second time you watch something, you're different. You're literally a new creature. So I thank you, Ms. Anderson, for allowing me to have a new experience every single Tuesday night at 9 p.m. So this is a talk with the finance doctor, your RX for Forex. So let me say up front, I am really doing my best to handle my allergies right now, but it is what it is. We'll move forward and do what we have to do. So I would like to start with something that Ms. Anderson said. First of all, let me say this. For those of you who are new to our movement, this is the only call that we have that is not chart-based or slide-based. So in this particular conversation, it's a talk with the finance doctor. So if you have a question, if you have a comment, if you have a testimony, please walk in the power of your unmuted microphone by unmuting and asking. So this is not the conversation where you type a question in the chat and I have to read it and answer it. Because watch this. When you unmute your mic, there's an inflection in your voice. People hear your issue. They feel your situation. And when we talk it out, all those individuals that have a similar situation, they also grow and they also benefit. So if you have a question, a comment, or a testimony on this call, please signify by making the diagonal red line disappear from your microphone. Thank you. So I want to start with something that Ms. Anderson said. Ms. Anderson talked about the fact that we want to look at a way to view our paradigm. What's a paradigm? A paradigm is a set of beliefs, the way in which you believe things. And we have a paradigm that says you get an education, and then after you get the education, then you get the job. Then after you get the job, then you work there for a number of years. And then when you finish, then you use whatever retirement plan that you have earned, and then you use that to do what you want to do. Now, I don't talk about this a lot, but I feel the need to say it right now. There are many companies who in the 2000s started taking some of their full-time employees and paying them with independent contractor money or independent contractor mechanism. And there are companies, and these are companies I was exposed to as a consultant. There are companies that began to take some of their employees and pay them 38 hours rather than 40. And the reason why they did that, because they started looking at the price of the benefits. And, you know, benefits is literally a line item. It is an expenditure. So when you have someone working for 38 hours, there are certain benefits that they don't have to have, like matching of a retirement plan. So matching simply means that whatever amount of money you put in your retirement plan, the company matches. So based on that, so I know that I just finished fussing at my 16-year-old. She says I fuss at her too much. She's probably right. but I just gave this long speech about not putting questions in the chat, and then I get a question in the chat. So I'm going to let that person unmute their microphone and ask that question. Okay.
Sir,
Yes. Yes,
how
sir.
how does taxes affect or trading affect our taxes?
That's a good question. Now, I'm going to answer your question, but I also want to refer you to one of the Talk with the Finance Doctors on YouTube. Why? Because I spent the entire class talking to the class, the entire half hour talking about it. And I gave you the actual forms and I was very specific. So I will give you the general answer now, but please go back and watch that. So income is income. Anytime we make any type of money, you know that it's going to be taxable. So what's going to happen is your broker is going to take your profits and they're going to send you a form at the end of the year letting you know how much you've made. Now, there are two ways in which we can deal with our brokerage accounts. Now, I say there are two ways, but there's really only one way for us in the BYOB movement, but I'm going to explain both sides so we can be thorough. So there's one form that you use where you take all of your trading income and you simply count it as income, and it is added to the total of what you've made in any other form. Then there's another form which allows you to take any losses that you have and then offset them against taxes. Here's the way it works for people who aren't in the BYOB movement. If you're not in the BYOB movement, anytime you have a loss in anything, you can use it as a tax credit. Now let's explain that real quick. A tax deduction means you take an amount of money that you spent and you subtract it from your overall tax income. I'm sorry, taxable income. When you subtract the deduction from your overall taxable income, now your taxable income is smaller. So then when they calculate tax, they're calculating on a smaller amount. For example, let's say you make $100 and then let's suppose you have a deduction of $10. So now when they calculate your tax, instead of calculating on 100, they'll calculate it on 90. And of course, taxes are a percent. So a percent of 90 is lower than a percent on 100. But when you have a loss, it's a tax credit. Tax credit means that's your taxable income, that's your deduction, that's how much tax you owe. They take that tax owed and then they subtract it from the tax owed. So if you think about what I'm saying, the first thing I described is a fraction. You're saving a fraction. You're having you're not getting $10, but you're paying tax on $10 less. With a tax credit, if you have a loss of $10, that's going to reduce your taxes by $10. So what I'm saying is that those are the two forms that I do not commit to memory that you use in order to calculate your taxes at the end of the year. However, I love saying there are two ways, but we only have to use one because we operate at 92% accuracy rate. We know that that 8% is actually our error as we are sharpening up our skills. So we would never need that second form, but it's always good to have a knowledge base. So Michael, does that answer your question?
Yes, yes, it does.
And I do want to encourage you again to go to our YouTube channel, BYOB Challenge, and find the Talk with the Finance Doctor on taxes. There are probably two of them, but both of them go into detail about the forms and just a 30-minute version of what I just said to you in 3 minutes. Are there any other questions, comments, or testimonies? So what I'm going to do right now is I'm going to be led by Michael's question, and I'm going to briefly change the trajectory of what I was about to talk about. Because I think that one of the core things that we're doing right now as a society is we're beginning to get more analytical about what is happening in our society and being able to put ourselves in a position where we can strengthen who we are, where we are, and how we respond. Cryptocurrency is a perfect example. That's not my point, but it's a point that just came into my spirit. So those of you that are new, I did a part 1 and part 2 talk with the finance doctor where I broke down the history and the definition of cryptocurrency just so that every single person can understand what's going on. But I say that to say this. I did a conversation 2 weeks ago in which I talked about the way the banking industry is set up. And I talked about how we can strategically set ourselves up and take advantage of the way the banking industry is set up. And in that conversation, I talked about the fact that it's not about banks. It's about analyzing infrastructure and recognizing the best way to put yourself in a position of economic empowerment. Now, I taught a class on the university setting for about 16 years called personal finance. And so one of the things that I would do in that class is I would be very active, very young people. And sometimes young people, all they want to know is what's on the test. So I spent a lot of time giving them assignments and applying things and doing things that would help them to remember. And I still get calls and emails from some of those old students who remember some of those principles and ask me questions when they get into certain personal financial things. But I said all that to say this. There's value in understanding the way things are set up and then putting yourself in a position of strength. So while I was giving Michael a shortened version of a very legitimate question, I decided to go on this tangent of explaining to all of us how we can take the infrastructure of the way the government has set up taxes and then have a conversation about how we can do the same type of strategic analysis that we did for the banking industry. Further reinforcing my point that conversation I had 3 weeks ago about banks had nothing to do with banks. It had to do with understanding infrastructure. I'll give you an example that just popped in my head. You go to get your car fixed. I would tell my students, when you go to get your car fixed, ask this question to the person that's fixing your car. How are you compensated? They're going to get very nervous because nobody ever asked them that. But when you ask them how they're compensated, now you get a feel for what you're dealing with. Because if they say, I'm an hourly person or I'm a salaried person, then there's one perception. But if they get nervous and they try to change the subject and nervously say, I'm paid per service that you order, now you see what's really going on. And that is why you get that situation where you go in for an oil change, they change your oil, then they come back and say, can you come here, please? And then you walk up to the car and they show you something and say, well, this is out of whack. Well, I wouldn't feel safe getting on the road with that. I noticed you had a car seat and I wouldn't put my child on the road with that. So when you understand that they're compensated, that they're paid per service, that they get a commission every time they sell you a service, the incentive is there for them to sell you more services because they make more money. I'm not mad at that. You set your auto repair shop up any way you want. I'm just saying, by asking that question, we empower ourselves to see how the infrastructure is set up, not be mad at them, but just be happy that we can put ourselves in a position of strength. Well, no, and I used to do this. I used to have a guy that was a car guy, but he lived far away. So anytime I would get one of those conversations and they would say, you need this, 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 and this, I would drive to him, have him look at it, and 9 times out of 10, it was a no, and then I wouldn't do it. If he said yes, then I'd go back and do it. So my point is simply that we're in a position of strength when we can analyze this. So Michael, what does this have to do with taxes? Let me tell you. I feel very strongly that there are a lot of things that we do as individuals that we could do ourselves. I also feel very strongly that when we reach the level of wealth and abundance and deservedness that we should have, we should feel comfortable saying, well, I'd rather not do this. I'd rather pay someone to do that. I agree with both. But let me use as an example to set this up, season ticket holders. My grandmother was a season ticket holder for the Tampa Bay Buccaneers 1972 when they started. And until she took ill, she was at every game. Now, nobody buys a season ticket and then says, okay, well, you guys play and I'll see y'all at the end of the season. That's not what we do. We're active. We're aggressive. We're sitting there. We're, I'm sorry. We're an armchair quarterback. We're making ourselves accountable and responsible for every single thing that they do. So I've always found it so interesting that we don't do that when it comes to finances. We don't do that when it comes to economics. We'll take our money and we'll pay for something, and then we won't even see whether or not we don't even watch what they're doing. Right outside is my lawn. My next door neighbor does lawns. So I give him $80 a month and he pays, I just realized I owe him, and he mows my lawn. I don't go out there and do it, but don't I look to see what he's doing? So what I'm saying to is we have to get out of this mode of paying for a service and then not being responsible and accountable for what's being done. Guess what? We do that with taxes. We do that with taxes. There's so many people who hire a tax professional every single year. You give them your information and you look away. And then they tell you what's going on. My argument is that the conversation I just had with Michael, in those 3 minutes, I just broke down the whole tax code. I explained every single part of what it takes to do taxes in that small 3-minute conversation. So if you want to hire someone to do your taxes, I'm okay with that. But I think you should make yourself accountable for understanding what's going on, just as if you were a season ticket holder, because you may find that you don't even have to pay that much. I've done my taxes every single year since I have been 18, but I don't do my taxes because I'm good at taxes. I'm a big picture. I'm a strategic guy. I'm not good at the meticulous stuff. I do my taxes because I want to be in control of all the data. So I'm not telling you to do that. What I'm telling you to do is be a season ticket holder. If you're going to hire someone to do your taxes, make yourself accountable. Sit on the front row, see what they're doing. Now, watch how easy this is. It is 10:18 p.m. Eastern Standard Time, Tuesday, October 19th. By 10:23, everybody in this Zoom and everyone listening to this recording will know how to do their taxes. Okay, it starts off with a very big amount. Guess what that is? Your income. When I do this on a board, I put an E in front of it. Why do I put an E in front of it? Just for everything. What's taxable? Everything, everything, everything. The government wants their money. Everything's taxable. Now, you take this big circle, which represents everything, and I want you to picture, visualize in your mind, 3 little lines coming out of this big circle. What's the big circle? All your income. Now, these 3 little lines represent 3 subtractions. Everybody knows how to subtract. Every single person knows how to subtract. So there are 3 subtractions that you make when you do your taxes. First subtraction is called an adjustment. What is an adjustment? An adjustment is a list. There are lists of things on there. If you look at that list, if there's something on there you did, subtract it. What do you mean by that? Paying alimony is an adjustment. So all I'm saying is that's so easy. The first subtraction is about the list. Look at the list of adjustments. If there's something you did, subtract it. Boom, almost finished. Second subtraction is called an exemption. How easy is that? More kids, more money. The government wants you to have more money if you have more kids. So you get an exemption for every kid, or more specifically, every dependent. So if you have 10 dependents, then you get 10 exemptions, which means you have a smaller taxable income. This is so easy. Third deduction. The third subtraction. First subtraction, adjustment. Look at the list. Second subtraction, exemption. Look at the people. Third subtraction, deductions. Tax write-offs. We already talked about that. So the third subtraction is one of 2 types of deductions. Either you take the standard deduction, which means they give you an amount and you subtract that from your income, or you do what's called itemizing, which means you write down all the stuff that you did. When you write down all the stuff that you did, if that amount is bigger than the standard deduction, you subtract that. And think about it. If you subtract that from your big circle of money, that now means you have a smaller taxable income. That's why people say, I'll just write that off. Guess what? I'm done. That's the tax code. Make the 3 subtractions. Adjustment is about a list. Exemption is about a people. I said it like that on purpose. Deductions is about what you spent. It's about expenses. Now, once you make those 3 subtractions, there's your taxable income. That's what the government uses to determine how much tax you owe. Guess how easy that is? You don't have to do a calculation. You go to the book. Or if you're doing it online, they'll do it for you. But if you're old school like me and you go to the book, there's a chart. And in that chart, you look at your taxable income, and based on that, it tells you how much tax you owe. This is so easy. I did it. I did it with 2 minutes to spare. 1 minute to spare. It's 10:21. You know how to do your tax, but wait a minute. The tax code is so complex. It is, but it's complex on purpose. But I just explained it to you. If you go through your 1040 right now and you look at every single line, it will conform with what I just said. There's going to be money, then there's going to be a adjustment list, then there's going to be exemptions for the people, then there's going to be deductions for whether you take the standard or you spend a lot of money, then you're going to have your taxable income, then they're going to tell you how much tax you owe. That's it. That's it. If you go onto irs.gov right now, it'll say the IRS tax code is complex by design. Of course it's complex by design because they want to keep the money. So if they make it challenging for you to understand it, then you won't be active because you're paying somebody to do it. Think about it for a second, y'all. If you had a very important mission that needed to be done, would you give it to a college student during final exam week? Of course you wouldn't, because college students during final exam week are busy and overworked. Hello, aren't accountants busy and overworked during tax season? So why do you have them making themselves accountable for your situation when they're busy and overworked? I've had graduate students during tax season that were accountants. They don't come to class at all in April, March and April, because they're so busy. So that's who you want doing your situation? So now watch this. Now that you know how much tax you owe, I want you to think about this. Now that you know how much tax you owe, during the year, what you've been doing is you've been putting money away to the government through your paycheck. I know this doesn't matter for us because we're economically free, but let's still talk about it for those who still work. So every time you get a paycheck, the federal income withheld goes to the government. So the government has all of your money that you paid throughout the year. But now, a year and a half later, you now owe this amount of tax. How do I know how much I owe? I just told you. Money, 3 subtractions, calculate the tax, boom, we're done. Now watch this. I'm gonna do a visualization exercise right now because I want everybody to really walk away with an expanded mind like we talked about at the beginning of the call. So I want you guys to close your eyes. Close your eyes. Close your eyes, and I want you to picture something. It's a Saturday night. You just got paid. You decide to keep all your money in cash. You haven't opened up your cryptocurrency exchanges yet. And you got all this cash in your pocket, and you just went to your favorite event, comedy show, new type of money concert, whatever you like to do, opera. You just went to a show, ballet. Now, you have on hard shoes, and you parked about 8 blocks away, and you're now about to walk back to your car. So as you close your eyes. So as you're walking back to your car, you decide to cut through an alley, a dark alley, because the dark alley will get you to your car quicker. So as you're going down the dark alley, all of a sudden, an assailant pops out. And they've got a gun. And they take all your money. And then they flee. They took all your money in the dark alley. Now, with your eyes still closed, I want you to picture you being at home a year and a half later, and the robber has a change of heart, and they send you a letter, and in the letter they say, I'm sorry I took your money. Here's your money back. Open your eyes. Now, I don't see any of you, but I know none of you are smiling. None of you are smiling. You know why you're not smiling? because the letter from the robber did not have the same impact as getting robbed. You spent more energy on getting robbed than you did getting the letter. That's why nobody was smiling. Now watch this. The dark alley is the government infrastructure. The dark alley is that when you get a job and you fill out your W-4, W stands for withholding allowances. You're always taught to put 0. I know you are. You're taught to put 0. I've actually had arguments with payroll officials who would not let me put 10 because they said you have to put 0. No, I don't. I'm Dr. Craig Byfield. I'm going to be doing a talk with a finance doctor in 15 years. Now, here's how it works. You can put anything you want in that box from 0 to 10. If you put 10, they take less out of your check. If you put 0, they take more out of your check. So if everybody's putting 0, the government is taking more of your money. I'm sorry. They're taking more of your money. And so when you find out a year and a half later when you do your taxes that you owe this amount of tax, but they kept this amount of money because you put 0 in your W-4 because that's the infrastructure in the paradigm, that now means that you owe less than you paid, which means they give you your money back a year and a half later, and guess what? You smile. You smile because you're not thinking about getting robbed. So my point to you is simple. I told y'all my conversation 2 weeks ago wasn't about banks. It was about analyzing infrastructure. When we think about the way things are set up, we think about the fact that every single year people smile when they get a refund because they don't even realize they got robbed. Now, if I were you, I'd be like, okay, that's a good speech, but what are the solutions? I just don't have time to give them to you. But I tell you this, the bottom line is this. The bottom line is to understand that a refund is simply an interest-free loan that you are giving the government. And the reason why it's robbery, because you're in a dark alley of non-understanding, because people are told to put 0 and they just blindly put 0 without thinking about the implications. But I'm teaching you, this movement is teaching you, the BYOB cash out strategy is teaching you to think through processes, to develop a skill set and an awareness and an understanding of what's going on in your society. Because what I just said is antiquated. It doesn't even match us anymore because we don't work anymore. And if you haven't got there yet, you will. So we got to take that same analysis and put it toward cryptocurrency and put it toward the new banking industry, and put it toward DeFi, whatever is going on, we've got to be able to analyze what's going on. Because for years, people just blindly smiled at refunds, not realizing they were getting robbed. Questions, comments, testimonies. Thanks, Michael. Questions, comments, testimonies.
Dr. B.
Thank you.
This
Miss
is
Anderson, ladies first.
That's just another example of how we have been conditioned to compound out, and the powers that be have systems in place to teach us how they are going to compound in based upon what they've employed us to do and conditioned us to think. Wow.
So watch this. I'm sorry, Miss Anderson. Will you finish?
Yes.
So watch how brilliant what Miss Anderson said is, because I didn't think about this. When you get a refund, they don't pay you interest, but let you owe them. The government is about 3 years behind in processing. So if they find out that there was a mistake made and you owe them money, they're going to pay you, they're going to charge you interest at a daily compounded rate for the 3 years. But yet when they pay you, no interest. Thank you, Ms. Anderson. There was a male that was about to say something.
Thank you.
You're welcome, Michael. Questions, comments, testimonies on a talk with the finance doctor.
I too, Dr. Bythewood, wanted to say thank you. You are the bomb, and we are so grateful because this education, as Mrs. Anderson said earlier, we did not get it in school, but now for generations to come, we have this to pass on, and I'm so grateful. Thank you.
You are very welcome, Mrs. Reed. I really appreciate you saying that. I really do. Okay, one more again. Questions, comments, testimonies.
Dr. Bythewood, this is Derek Kenner.
Yes, sir.
Is there anything in the video that talks about the percentage of brokerage fees that we pay when we
I'm sorry, sir. The percentage of what?
Brokerage fees. The fees.
You mean like when we do our trading?
Yes, sir.
I want to give you a good answer to this. I do not know the numbers, but the way I feel about that in general is that if we have an opportunity to be able to increase our wealth and abundance, and the only thing we have to pay is a fraction of what we're paying, I do it every day of the week. Now, what happens a lot, or what happened in old situations where we didn't have access to this type of vehicle, brokerage fees would be set up in a way where you would have to pay for each individual stock. I'll give you an example. In the 1980s, when we purchased stocks, each brokerage fee was about $40 every time you bought a stock. And that's when you had to buy stocks in 100 lots. But as technology happens, as we continue to grow and expand, the prices come down. I call it the Sam's Club principle. So I remember the first online brokerage, because the first online brokerage was the first one not to charge that $40. And I remember saying to myself, well, those $40 won't last very long. And so the prices went down. So it's a legitimate question, but I want to make it irrelevant, because regardless of which broker we have, regardless of what our spread is, because not only do we have spreads that are different per broker, they're different per pair. You can be trading 3 different pairs and they have 3 different brokers, 3 different spreads based on what's happening in that market, liquidity of that market. You know, if you go to your MetaTrader 4, when you are looking at your quotes, underneath each one, it'll show you the spread. So when you see how different those numbers are, that's really the point that I'm making. So yes, legitimate question. No, I don't have an answer for what the fees are, but I do know we want to be economically unbothered and not care about it.
Very good.
Questions? I'm sorry. Go ahead, sir.
No, I was saying thank you very much. I appreciate
Well,
it.
you're welcome. Questions, comments, testimonies before we close out this call. Okay, thank you, everyone. Michael, again, thank you for directing the trajectory of this conversation. Every single person that benefited did so because you decided to ask your question, to express yourself, to get fussed at by me, and to unmute your mic and walk in the power of the unmuted microphone. So we're going to close this call in prayer, and I want everybody to have a wonderful Tuesday, and we'll see you at 5 a.m. Heavenly Father, thank you for a conversation of growth and expansion. Thank you for a Power Pack Tuesday. Thank you for this movement. Thank you for our educators. Thank you for our BYOBers. Please allow us to continue to do what we're doing and continue to reach all of our goals and meet all of our desires. We are thankful, we are appreciative, and we are grateful. In the mighty name of Jesus, we say, amen. Okay, everybody, this will officially end this call. Take care. Thank you, Mr. Wells.